Good morning. I always want to say afternoon. We're so close here. It depends on if you're Central, my time, or if you're Eastern. And if you're Eastern, you're a little bit behind anyway, even though you're ahead. But that being said, Chris Franks with TexasWest Capital. I've got Andrew and Tillman sitting in the wings here, ready to jump in and just totally decimate anything you think you know about Bitcoin. And along the way, we'll probably piss you off a bit, but that's okay, right? We're going to make you think. We're going to make you consider, and then hopefully you'll be better off for it. Before we jump in here, as always, go ahead and hit the thumbs up, hit the like, hit the subscribe, follow us. Do me a favor, share the link here, guys. I put the post out here, as I always do every Wednesday morning before the show, about an hour before, and it doesn't look like I've got much traction on that. I'm thinking there may be an issue with X. We usually get a lot more views on it before then. So if you could share it out there, that'd be great. Today we're going to talk about Jack Mallers and 21 Capital and what they're doing. They just recently made a purchase of about 4,900 Bitcoin. And then the Trump brothers, Eric and Donald Jr., it looks like their American Bitcoin mining company is going to complete a merger here and be public probably as soon as Q3. So we've got all that, and of course more to talk about. Let me bring them up here. Let's see if we can catch them when they're not paying attention. Oh, almost got Tillman. Almost.
I was writing nasty comments on your homepage. It was sorry.
Where?
On your website, I was giving you a Yelp review. It was.
It figures, yeah. I expect no less. Anyway, see what I have to put up with, everybody. Do you see what I get to put up with here? Man,
listen, you bring it upon yourself. There's what goes around comes around, and all the remarks that you make against me specifically before you let me on the podcast, so they come around to you, man.
It's this guy over here. It's that guy over there, the other side of you.
Listen, okay, well, what else do you want me to throw at you? It also took you over a year to create a custom intro for the show. That's another reason why stuff's going bad right now.
It got done. It got done. Be glad. You should be saying thank you.
I do like it. The beard is the best part.
Yeah, I thought it came out pretty cool. You don't like the 3 beards, 1 brain chain with the B as the Bitcoin thing?
No.
Good.
But it's good. I'll give it it's a solid A. I've got no beef with it.
I noticed, interestingly, Andrew is quiet. I couldn't tell if maybe he had his mute on or something. He's usually got a snarky comment or 3.
He's short MicroStrategy. It's rough right now for him.
Yeah, I've gone long 21 Capital and short MicroStrategy. That's what I've done, and it's not going well for me. I also went long Kindly. That hasn't gone well for me either over the past hours. But there's going to be a lot more RTF and pipes happening in the Bitcoin space over the next 2 quarters. You can bet that's going to happen. The one-day performance of that announcement, and then the move in Kindly stock, and the Nakamoto stuff and all the attention that it got, that's going to happen a bunch more. And they laid out a pretty clear strategy for doing that, because a reminder, an RTO it's not just about the performance in the first few days. You also now are in control of a huge amount of shares, a huge float. So even if that stock is at $5, you still got a lot of coin in your pocket, so to speak. So that will that process, I think, it got a lot of pub on the first day, and as it should have, but it will lead to a bigger. There'll be more that will happen, and I assume in a 6-month period. You know how SPACs were all the rage, and then were not. right? The bubble in SPACs that turned into not great. I think same kind of thing will happen in this take over a bit of a dead company, do an RTO, and things go crazy for a while. I think that same curve is going to happen in this particular space with Bitcoin only treasury company. So effectively, you're just buying Bitcoin. You call it all other versions of it, but you're just buying Bitcoin, and that's your thesis as to why they should own the stock. I think that's going to happen a bunch. I do think there's a reasonable amount of money to be made as that bubble is created, but you better time it right and get out, because it'll crash and burn.
Well, I don't think they're all created equal, though. I think that what's interesting, one of the things I took away from the headlines is that Mahler's said he's going to sell Bitcoin, right? Which is a very different stance than Saylor's taken. Saylor's basically said, over my dead body. In fact, I'll burn my personal wallet at the end of my life. Yeah. So I think what we're seeing is like there's been a tremendous success story in MicroStrategy. People are wanting to copy it because it's easier to copy than to invent. And they're tweaking it, in little ways, and they're going to either live or die on those tweaks. You know what I mean? Like, I think there's going to be a lot of failures in this space, to be honest with you. And I would say that the bloom is going to be on the rose for a while, in my guesstimation, because the price of Bitcoin, I think, is really early in this bull run. So, as price continues to get into, the 100,000s, it's going to continue to grow in popularity. When it cracks 200,000, it'll be continuing to grow, and it'll fizzle out kind of, I think, at the same time that the bull market fizzles out, in terms of people trying to ride that wave, because it's just easy money, and it's really the best multiplier that you can get in terms of share price value and, a liquidity injection into a zombie company. There's nothing else that does this. So I do think that we're going to see a lot more of it. And I think that at the end of the day, you're going to see people trying to outperform the previous predecessor in their model tweaks. And you're going to find that line of failure very, very quickly. Because as we've all seen in this industry, when you are too competitive in terms of offering yield attached to crypto, that volatility cuts both ways, baby, and you are in for a bloodbath.
Yeah.
So
my initial take is, again, that there will be, again, a SPAC-like process, right? SPACs were a boon to the markets for an 18-month period, and then in the following 2 years, not so much. What I will say is, we love as consumers and as Bitcoin holders, because we want to see the price go up. We love seeing headlines. 21 Capital bought $458 million of Bitcoin. That's a great headline. As a corporation and as a fiduciary associated with the shareholders of that corporation, that's actually pretty stupid. We bought $458 million of Bitcoin at this price, 101 or whatever it is. Like, how about you announce we have $458 million. We have a particular schedule over the next 3 to 9 months, and we're going to follow that schedule. And so smash buy at 458 sounds like some drunken idiot who forgot that he even has a wallet of Bitcoin 2 years later. I mean, that I know we like the headlines. I know that it makes us feel good. And then you see a little blip of Bitcoin go up by, a third of a percent, and we're like, oh, cool, another green candle. But that's a bad strategy. Like that.
Well, I think you just articulated the litmus test as to how serious somebody really is in the space. Because if you are chasing headlines, you're right. That is the sexiest thing to say, is I'm smash buying, hundreds of millions of dollars. But if you're really taking it seriously as another component to your overall financial strategy and the health of your company, that looks differently to me. I could completely agree.
Yeah, and so, for those that aren't aware and have been sleeping under a rock, maybe, it's Cantor Fitzgerald, I believe, that's going to be merging with them to create that 21 Capital, and that'll be listed under XXI when that happens. And at that point, I think it's going to hold something like around 42,000 Bitcoin or something like that, which, I mean, obviously is quite, dare I say, insignificant compared to 500, thousand Bitcoin.
Well, overall, the movement is good for Bitcoin, right? Because that just means we're going to have higher prices. We've got high level, deep pocketed organizations that are buying big stacks of Bitcoin on an ongoing basis. So an arms race is great. That's fantastic. And you couple it with the additional corporate arms race that's growing right now. You couple it with the Bitcoin ETFs and that arms race, and you have a very, very high floor. My post this morning is basically in 2021 at the cycle high, within 3 months, we were down 60%. Like boom, boom, just like that. We're 6 months essentially from our quote unquote cycle high this time around at 109. We're at 103.5. And, we popped to 105 and we went down to 101 and now we're back up again. Like the price action has completely changed. The floor is much, much higher. People are, well, why aren't we higher? Why isn't it, why aren't we higher than we are today because of all of this buying that's happening? Again, it's kind of the wrong question. The question is, hey, where are we at with this high floor? Because the floor is as high as it's ever been with Bitcoin. And, I'd mentioned last week or the week before, if you were able to buy Bitcoin in the 80s, like, I mean, that may be the cycle low for the next 6 months. It absolutely may be. And because, again, Bitcoin has done a thing for the decade where when it makes a move that's 40%, 30%, we've seen essentially a 40% move over the last 45 days. When it does that, it oftentimes will chop off 20, 25% of that almost immediately. And it doesn't do that. It popped last week to 104, 105. And, bottom line, it hasn't gone anywhere. Over the weekend, it basically did not. It just stood at 103 essentially over the weekend.
The setup technically concerns me because it's perfect. The price came down and touched 75 perfectly. 75 was massive resistance in previous cycle. It became support in this cycle, which is like textbook macro movement, right? And when it breaks all-time high, you have confirmed price discovery off of a huge moving average bounce in 3 months of confirmation. The problem is that I could see this as another way to create some liquidity and create some additional supply because the demand is so high. And so, my question is, me personally, this is just me personally, and don't take this as advice, but I'm not so convinced when it breaks 109 that we're going straight to 120 or 115. I think if I had to predict my own crystal ball, it's like we break 109 and there's a massive sell-off to either that or we get real close to breaking 109 and we get rejected. Yeah. That will be a nice little pocket of liquidity that the big boys can pick up. Because if it does get technically rejected before it breaks 109, we should see retracement back down to 100 minimum, like, in my estimation. So I don't know, Chris, you can either disagree. You're the guru on technicals.
That's an incredible statement, though. If we get rejected at 109, we retrace to 100. Yeah. Saying that 3 years ago would be like, I can't wait to get there. I can't wait till we're there if you own Bitcoin. You know what I mean?
I agree with you. Yeah, it is a completely different type of a floor. But I think for the traders and for the people who are trying to time the market, it's enough of a swing. Like it could be 10% move, both one direction and then 10% back up to the all-time high in the other direction. And it could sit there and channel between 100 and 109 for, weeks. And having this, this cycle event where weekends are getting flushed out before it breaks the all-time high with conviction and then goes kind of into price discovery mode.
Yeah. So as a technical trader, I mean, this is, I teach this all the time. And the idea is most generally, when you have these, when you're going kind of sideways, you have a decent pullback, usually you're going to get a rally up into that resistance, and usually a little bit before, a little bit after, and then you're going to pull back. And then you're going to get the great participation on that breakout. And this is usually more, relevant, especially when you're looking at all-time highs, because, everybody's set up there. We've got people that are still, I said this on Scott's show this morning. I'm seeing people still popping up in my feed. I don't know why, the algorithm thinks I want to see it. But talking about that the top's still in. And they've been holding bearish, and they were telling people to short down at 70 and 80,000, and they're still telling them here that the top's in. The reality is we have rallied about 90% now since April 7th, 30 somewhat $1,000 on a off a $75,000. So 40-50% we're rallying up here, and we're just about to get out there. And so for me, my initial thought is we get up into that resistance somewhere around there, and we get that decent pullback. And
I try, I do my best not to call people names, but people that are thinking that, why are you counter trading Larry Fink? I don't understand it. It doesn't make any sense to me at all.
Well, you're an investor though. Like traders have a different mentality. Like they love the swings. That's where all the money is made. And so if
he's talking about guys that are bearish, and we're saying we're going lower at 70.
Yeah, but they may be traders, is what I'm saying. They may be, temporarily bearish. Some traders, if you find somebody that's like a really short-term trader, they don't think about where Bitcoin could go 5 years. They don't give a rip where Bitcoin going. They're just looking at the most volatile asset that they can play with tomorrow. That's what makes up here to my point. And by the way, those traders all trade with big leverage. So even though they're using little bits of capital, it represents a huge opportunity to make money on them. And so I would venture to guess if it plays perfectly like it is right now, and we go up to 109 and we break it on a big volume bar, the question I would have is how much leverage entered at that moment? Because if it's a lot, in my opinion, it won't be sustainable, because the people with money, shooting fish in a barrel is an understatement as it pertains to getting people who have leveraged positions to cough it up. What do you need to do? You just need to take it down 10%. Why? Well, some of these guys are very highly leveraged with very little cash. And so, I think these are the types of setups where the leveraged plays for retail are where, there's a whole lot of cash creation opportunity for the big guys. And that allows them to essentially lower their cost basis on their accumulation, which is the name of the game if you're in a parabolic move, right?
Yeah, but for me, I mean, actually what I was referring to, a lot of the ones that I'm seeing are the same ones that called it was the top every time we hit a top over the last few years. They were like, 20 and 25. And then, as it continued to go up there, every time we'd hit that new high, they'd be like, oh, this is the top. That's it, and they're going in. And here, it's not even like hey, let's go long up into the, resistance. It's like, no, it's got to go down. You break that descending resistance and they're like, oh no, it's got to go down. But we're seeing this clear kind of movement to the upside where you've got a strong move up some sideways, strong impulsive move up, some sideways, strong impulsive move up. And that's indicative of a trend, right? And so one of the most basic things, you know, as a trader or somebody's in the market is you have to be able to distinguish between that and the overlapping price action, right? If you're in the same direction and it's all overlapping after you've come off a different direction, most often, even without looking at the volume, you're going to, you know, you should be right to assume that that's going to be corrective. You know, and so, you know, if anybody looks at the Bitcoin chart right now and they look at the daily, they can see that even though we got that pullback from, you know, 108, 109 down to 75, it was all a bunch of overlapping. Even when it had the big move down, it was a big move back up and overlap over that to continue lower. Completely wholly different than what we're seeing right now than what we saw prior to that coming up. And, you know, the problem is people try to be really cute, right? And I've seen this cycle after cycle with Bitcoin. They try to be cute. They try to sell every what they think is the top and buy every what they think is the pullback and, you know, whatever's they're going, even without, you know, the overall bearish or bullish sentiment. But the problem is you get into these situations like we have right now where we have not really had a decent pullback. I mean, I'm looking at the chart right here. We had, after our initial push up, we had a pullback off that rally of just 23.6%. That's not a wave 4 is 38.2%. So it's not even that. So the next move up after that, we get another pullback again, a little bit more, just beyond 23.6. Here we are again on this current, you know, pullback we're at here. And that one's got a 38.2 pullback, but none of that has been, this is the first time we're even hitting 38.2. By this time, usually when you're rallying, you know, you're going to have like a 50% pullback at some point, at least once. We're not getting here. So people get in and they go, okay, yeah, well, I'm going to, you know, sell here. I'm going to buy way back here, what we would expect. And then they get caught and then it takes off without them again. And then they're scared to get in. They finally get in, usually right around the point at which it pulls back again. And they get caught in this cycle and they start revenge trading. And, you know, they don't end up appreciating the movement.
I learned a long time ago as a trader and an investor that, you know, limit buy orders are a bad idea, especially if it's a sole. You're making a bet that it's going to get there, and that's when I'm going to buy. And you even have the balls and the temerity to actually, you know, type in the actual limit buy. I watched in 2009 during the great financial crisis. I had a limit buy order for Bank of America at $2.25.
I was going to say, please tell me it was a bank.
Yeah, at $2.25. It got to $2.27 and didn't go to $2.25. And, you know, like 6 months later, it was $5.50, right?
Yeah.
So layering in, if you want to make an investment, you layer in so that you do have exposure, right? You can have that bottom of the barrel number that if you hit it, it's the greatest investment you've ever made. That's great.
Well, that's for back up the truck number, you know?
Yeah, right, exactly right. But if you still have exposure and then it rockets higher in some sort of V shape, which, by the way, markets continue to do more and more and more often nowadays, right? But, you know, what was April? April was a V-shaped recovery from a down cycle based on stupidity associated with tariffs and whatnot. When we got down to 16 and change on the NASDAQ and then rocketed higher, right? Yeah. So, yeah, a lesson learned, right? And so if you're a trader now looking at Bitcoin and like it's going to go under 70 at some point, that's when I'm going to buy. That's just a bad idea. You know, take whatever position you think you're going to take at that number, cut it up in 6 different ways. And even if you only catch 4 of those and it moves and it never hits that number, I promise you're going to be happy on the upside. You're not going to be pissed off that you were kind of wrong on where it would end up. That's well,
it starts with a central truth that no one's right.
Yeah.
If you pick one point, you're wrong. Period. The end. There is no arguing about that. So you have to be truthful with yourself that you cannot pick bottoms and you cannot pick tops. And when you are truthful with yourself about that, you're able to, like Andrew's saying, layer in. Like, for example, I'm a huge bull, but if I'm in short-term trading positions against Bitcoin right now and I see it stall out at 103.5, I think that's a good time to take some of the money off the train. You know what I'm saying? But it doesn't mean I've lost my conviction in Bitcoin going up. It's just the short-term trading capital that you're applying to the markets. You have to be in tune with the markets. And, you know, to Chris' point, you know, there's a lot, like right now, forget the long term. If you ask me like, what's the long-term trajectory of Bitcoin? I think everybody knows what I think. It's going way, way, way up. Larry Fink up, let's say that. But if you ask me like, is it going to break 109 and run to 125 in the next 14 days? Anybody who tells you they know the answer to that is a liar. And so if you want to play that range, play it in segments, apply capital at varying zones so that you're not lumping in and just praying that you picked the exact bottom, because you're going to be disappointed. And what happens after you don't pick the exact bottom? You're emotionally attached to a trade that you have arbitrarily entered.
And I think this is absolutely a great point to bring up for, you know, newer traders, especially, or those who are not consistently profitable yet, which is this idea of layering in and layering out. Make sure you have exposure in the market, especially for something like Bitcoin, because damn it, if there's one thing I've learned since I've been in, you know, I got in January of 2017 down there when it was around $1,100. That's crazy to think about now. And I say that it's near at 100,000. But, you know, the one thing I've noticed, especially with Bitcoin, is you're going to get these big movements, and they're going to happen usually when you're not expecting it, and not being exposed in some way. You end up, you know, really regretting it. And it does a lot of mental and emotional stress on you, which is going to cause you to then take dumb trades trying to get in. By the time you finally give in, usually to the point where it pulls back, you keep your stop loss too close to it. Guess what? Because you're just one position in, right? One position in, stop loss right up the rear end because you're scared to lose any money. You're scared for it to come against you a little bit. You know, you don't know what you're doing. So this idea of being able to ladder in on a pullback or ladder out on an extension, if you're still trying to figure things out, or heck, even if you're, you know, much more experienced in the game, it's going to allow you to recognize over time a lot better entries overall, a lot less losses on those entries, and a lot more locking in profits, which is the key thing, right? Because as we talk about over and over again, time and compounding are your greatest assets, whether you're an investor or a trader, especially because the more profits you lock in, the larger the position, the larger the dollar size, the dollar denominated size you can have your position, which increases more profits the next time, and still keeping the same risk management.
Well, and the math tells you this. I can prove it to you mathematically. You want me to show you how?
Go for it.
There is, in 16 years of Bitcoin, if you had purchased once a month for 12 consecutive months, at any point in that curve, you're up. You cannot say the same for picking 12 points randomly and smash buying. If you smash buy at 109, you're down, right? Yeah. But if you just broke it up over one purchase per month over any period of time you want to look at, you can't be down. So that's the point, is like, you want price exposure to Bitcoin over the longest period of time that you can get it. Why? Because that's been the most predictable time period to measure up against. If you measure it in the shorter time periods, I can take you to periods in Bitcoin where we've had 50% crashes in like 2 weeks. If you chose wrong in that period, you're not just down, you're down half. So, risk is about how much exposure you have to price over a period of time. The longer the period, the less risk you have. Period. The end. There's no arguing that. It's math.
And so what are we talking about? We're saying what's the thing, right? Retail comes in generally when they first start trading and they think crypto whales and Wall Street are, stealing their money from them. But at the end of the day, it's really, excuse me, it's really them stealing the money from themselves, right? It's the emotional impact that hits you when price is pulling back against you and you don't understand proper risk management and you're layered in everything all in at one point. Like you said, those that bought at 109, most of those people that bought up around 105, 109,000 before it pulled back to 75, I would venture to guess
they puked it up
out on the way down.
Well, they puked it up 100%. Well, most of them definitely puked it up because they're going, this is ridiculous. This is a scam. I've never been in an asset that's dropped 30% in 2.5 a month. This is exactly the reason why people told me not to buy Bitcoin. They convinced themselves to puke it up, and then that liquidity gets injected in the market. It gets accumulated, and boom, we go back to all-time highs, which we're knocking on the door right now, right?
Yeah. So the important thing, folks, if you're listening, if you're paying attention, if you really want to learn, is that understand your biggest enemy in the markets is yourself. It's your own emotion. It's your own psychology. It's having to deal with it. Okay. And
that's why algo trading is kind of taken over because like I'm looking at the Solana arbitrage algo that we have, and it picked the Solana bottom perfectly. It had two entries at Solana at 106. Yeah, 104, 106, and 110. Okay. And it crushed on those two positions, but it also bought higher up. It had higher entries. You didn't crush as much on the higher entries, but you did on the lower entries, but you have a lot of capital to continue to play the market against the conditions that present themselves versus going, you know what, I know exactly where the bottom is and I'm going to try to time it. That's a recipe for emotional torment.
Yeah. It really is. It really is. And I think, again, this is as somebody who teaches technical trading, right? And I discuss it often out there. One of the things I often get, and I can usually tell if somebody's, new to trading or, is not successful, consistently profitable, because their first thing that they'll say to me is, stop posting all this emotional, psychological stuff. Just give me charts. Well, the reality of it is that your emotion and whatnot that you're not dealing with is exactly the reason why, no matter what the chart is, you will always fumble the ball. You will always fumble it. It's a realization, right? It's a reality there. I had somebody, I do my Friday show where I kind of, give out a lot of trading advice and we look at charts and whatnot and, kind of break down the markets. And somebody replied, I commented on it, they were asking, why does Chris always talk down or basically, to retail traders and whatever. And I'm just like, well, no, that's not what's going on here. If you think that's what's going on, that's your mental block, that's your emotional response. I'm trying to tell you, listen, and I say it all the time, I've been through this, I've done this, and I've learned that once you understand this, you can move on, you can do more. But as long as you don't recognize this and accept it and do these things, you just, you're going to continue to make those same mistakes over and over again. And I repeat these things, right? I repeat the same things that are most important all the time, whether it's on that show or this show or whatever show I'm on, because let's face it, as human beings, we suck. We don't take, we don't listen. We're really bad at listening. We think better of ourselves than what we can often do. And the things that we do badly, we kind of just brush off as, it was nothing, it wasn't that bad. And so we minimize the bad, the mistakes we make, and we kind of really maximize as if we're godlike the good decisions we make.
Well, it's simple human nature. We like to feel good about ourselves, and so we feed ourselves information that makes us feel good all the time. And we choose to ignore the things that make us feel bad typically. And where you improve is focusing on the things that you did bad and trying to make those not bad, right? But Andrew's got the tinfoil hat coming in. Let's switch gears to it for a second. I thought I ran something through ChatGPT that I love having at my disposal this mathematical genius that I can just do calculations very simply because math speaks volumes, right?
Yeah.
And
before ChatGPT inside the company, he used me as the mathematical genius. Most people don't know that.
Where's my tinfoil hat?
Most people don't know because it's not true, right?
Yeah. Andrew, I'll teach you after this call how to use your email.
No problem.
Don't let him teach you. It's a trap. You'll get sucked into email.
How much is this candy bar? About $100. About $100.
So listen. So here's what's crazy. Everybody's in corporate mode is adopting, right? And everybody's trying to find like, what is prudent? Is it 1%? Is it 3%? Is it 5%? What is the number that makes the most sense for someone who has available cash, sitting on cash? What is that number? And to me, I go to the inflation rate, right? And I say, okay, if we have an inflation rate of 9%, which isn't a bad thing if you have growth to match, right?
Yeah, you gotta have that growth.
Yeah, if we have though high inflation but also equally high growth or exceedingly high growth, then we'll be great. And I would argue that it's inevitable because it's a compounding problem. Interest over time compounds, and the amount of inflation we have to print in order to stay up with that compounding interest is an ever increasingly increases every year. So let's just say 9 is a good number for the foreseeable future as an estimate of what I would call the worst case scenario in terms of inflation rate. Well, if you take the 79% AR, performance rate average over the last 16 years that Bitcoin's been around, and you apply how much cash do I need to put into Bitcoin out of 100% of my availability to completely erase inflation from my purchasing power? And the answer to me was shockingly low. You have to put 11.4% of your available cash into Bitcoin to completely erase the effects of the printing press on your money. That's incredible. To me, that risk reward ratio is crazy good because 11.4% compounding annually turns into a hell of a lot of money. So I think that's another, like, if I'm talking to myself about, I'm a business, I've got available cash, what do I want is my emergency number, my emergency fund number. I'd love other people to chime in and come up with some new calculation that makes more sense. But to me, that's a very powerful conversion that you have. Give up 11% of your available cash to completely offset the erosion of inflation against your capital. That's
and you don't even have to be a Bitcoin maximalist to do that. It's only 11%. It's not like, it's not overly significant. So I think that's even greater, as a selling point, because there are companies that obviously still are deciding they're not going to do that. I mean, I think we saw here recently, what's his name over there at Coinbase was mentioning that Coinbase a few years back had kind of discussed whether they wanted to follow Saylor's idea, and they decided against it. And look at where they could be today. But
their business though over a period of time, they just got added to the S&P 500. I mean, they're in a different world than MicroStrategy will ever be. Everybody was thrilled that MicroStrategy got added to the a NASDAQ 100 sort of index. Like, who cares? The S&P 500, again, being in the S&P 500, the truth of the matter is that 90% of the investing world on a go forward basis in effectively the next 2 quarters will have some connection to crypto, because the S&P 500 is the index to rule all indexes. That's what everybody owns. 80-year-olds down to 50-year-olds down to 30-year-olds that do any kind of investing in any traditional way have S&P 500 ETFs as the foundation of their portfolios. So
well, the money that's
ETFs,
taken out of every paycheck for those retirement accounts, that's the smash buy of all smash buys. Right?
You're investing in Coinbase in one shape or form. All right. So that being said, will Coinbase find themselves making an announcement in 6 to 12 months that, hey, we actually are accumulating some Bitcoin as part of our overall strategy, and maybe they'll highlight our corporate Bitcoin account has gone from this to this to this. They may not equate it with MicroStrategy or the others that are doing it, but it will be in their best interest in terms of their overall share price long term to be seen as one of the companies that accrues Bitcoin. Why? Because beyond all the S&P 500 funds, they'll then be additionally added to tech funds, Bitcoin treasury funds, yada, yada, yada. So it wouldn't surprise me if they kind of sneak their way down that road without doing a huge announcement and fireworks and saying, we're building a big Bitcoin treasury. I think first of all, they have to, because they're a huge custodian, yada, yada, yada. They've got.
Well, they have to because of depth of liquidity purposes. Right. Like they're the market makers, so they have to hold Bitcoin. The question becomes, how much are they reinvesting their profits from transactions into buying more Bitcoin?
Right. Yeah. So I think they'll be, I think they'll go down that road a little bit because it will be beneficial to them. It will be of benefit to their share price.
So speaking of Coinbase joining the S&P 500, there's been a lot of talk about Robinhood. What do you guys think? How do you think Robinhood positions itself now that it's acquiring WonderFi over there in Canada, the Canadian company there? Mr. Wonderful company.
I think that infrastructure is the play. You have to connect financial markets to have a future in this new Finance 2.0 ecosystem. And what that means is you have to connect traditional markets to crypto markets. And, Robinhood acquiring them not only connects traditional markets to crypto markets, but opens up a new territory that they didn't serve before, which is, again, infrastructure, growth, customer acquisition. Like customer acquisition is going to be the biggest chase of 2025 because everyone's building infrastructure. Now you need the people to show up and use it. Coinbase has got a big head start, but there's been a lot of innovation that's happened under the covers over the last 5 years that I think is about to be released. And I will point to my newfound genius, Caitlin Long. She is doing something in the banking space.
I thought he was going to say me, Chris. I thought he was too. I was so excited,
No, it was not. But we had a podcast with her, and she broke some news on the podcast regarding the fact that she had created a deposit token inside of a regulated bank, sent a deposit token transfer cross-border, settled instantly, FDIC insured. Like, to me, that was ground-breaking stuff that I didn't even know anybody was working on in the background because everybody's talking about stablecoin this, stablecoin that. Well, in my opinion, if I have a choice sending an instant transaction through a bank that will guarantee that if I fat finger the address that they give me my money back, or doing it myself, I'm picking the bank every day of the week. It's a covered transaction and it's covered by the FDIC. That is coming. And the fact that it's coming means that we're going to have retail banks connected to marketplaces that allow you to trade traditional finance instruments right alongside crypto. That's full circle liquidity pools. That means money can flow across those asset classes back into your bank account exceptionally fast and efficiently, and that's going to be the standard going forward. And so she gave me the hint of all hints on that podcast. She said, look at how many people have applied to be a bank, and look at how many people will come to apply to be a bank. And guess what? Robinhood just applied to be a bank.
So let me ask you here then, Andrew. Obviously, Robinhood was with the whole GME debacle, right? Anybody? What was the movie it was made after that?
Dumb Money.
Yeah. And we kind of got to see what was going on there. We find, their selling order flow and whatnot, and the discussions I guess they had with the SEC there at the end. It almost seems to me like Robinhood's like being anointed, given because they made it through that basically unscathed, and here they are today, doing what they're doing. Are they being pushed up there, at least by the U.S. here, to compete with Coinbase? Do you guys think maybe that's something that's happening there?
Well, what I would say is the numbers tell the story. And so right now, Coinbase has 120 million customers and Robinhood has 25.8 million. Yeah. So there's a ocean of customers that make the two very, very different. Now, does that mean that Robinhood doesn't have the ability to compete with and grow to overtake, large banks associated with, here in the United States and globally? Of course they do. Do demographic trends benefit the likes of Robinhood and Coinbase? Of course they do.
The partnerships that Robinhood has, I mean, they've got Citigroup as a partner.
Yeah, right. So there are, there are long-term trends that work in Robinhood's favor. On top of that, too, what both of these organizations have at powerful tools is brand and name recognition, right? So Robinhood effectively is the name that you think of when you think of online investing if you're under 50 years old. Like Robinhood is the first name that comes to you. In other words, over a longer period of time, it's difficult. There's no such thing as bad press, right? Like the GameStop thing was bad in the moment, but now Robinhood's name is imprinted on everybody's brain, right? That's what people think of. And they made it through that storm. They pushed through it. Their stock went higher, and then they innovated, right? They've done a lot of things with product, pushing crypto back onto their platform. But the difference between Robinhood and Coinbase, again, is the brand associated with crypto. It just absolutely is. So the question then becomes, what move in either direction? Coinbase into the more traditional finance space and Robinhood into the more crypto space. What move makes the biggest dent for each brand, right? Is it easier for Robinhood to push up into the crypto space and go from 25 million customers to 75 million customers? Or is it easier for Coinbase to move into the traditional space and go from 120 to 200 million? That's going to be interesting to watch. It's going to be very, very interesting to watch. One of the things also to watch is,
who's your bet? I'm curious who you think, which one, where you fall. I'll go first. I think Coinbase has the advantage.
Yeah, I think they have the advantage too. And I also think that Coinbase would be smart to buy companies that dabble and have even the smallest foothold in traditional markets, right? If it was 3 years ago, and regulatory was as it is today, I bet your Coinbase ends up buying TD Ameritrade instead of Schwab. Coinbase ends up buying another online broker dealer like E-Trade instead of Morgan Stanley, right? So, but that's not the case. So what else is out there? There's a Webull that's out there. There are other platforms that are out there.
They could buy TradeStation.
Yeah, it could buy TradeStation. They could, NinjaTrader got bought by who? Who bought NinjaTrader? I forget.
I can't remember.
Kraken bought Ninja
Kraken did,
right?
Was it Kraken?
Yeah.
Yes.
Oh,
yes.
good.
So we're in a position where we're going to see that happen. And because of the really, really full pockets that, crypto organizations are going to have over the next 18 months, because, there's going to be 50 companies that either do an RTO or a pipe or an IPO or something. They're going to raise a ton of money. A ton of money is going to come from traditional markets into the crypto space, unlike anything we've ever seen. And so it's a question of who's really smart at mergers and acquisitions that bring customers to their platform, and what do they do with those customers? That's the question.
Well, and I think Ripple's doing exactly what you're talking about. Like the acquisitions they've made are all about connecting traditional markets with their ecosystem, and whatever the value proposition that they make to the consumer in using that ecosystem is going to be, judged on the merits of the competitive environment that they are in. And if it's the fastest, the cheapest, has the deepest liquidity pockets, gives you access to all the same stuff, they'll go a long way in acquiring customers. And I'm excited to see this, because we had this, we saw this, I would say, through TradeStation had the ability to do this. It was quirky, and you had to have two separate accounts and transfer money between the two accounts, but you could have this kind of full circle effect where you could trade crypto, pull it off from the exchange into cold storage, also trade futures, and transfer money back and forth between those. But then they had to pull it because of regulatory headwinds that, through the Biden administration. Now, I think that's going to be the mainstay. I think everybody has to do that, and it's going to be a matter of survival as to what your ecosystem looks like from a cost and liquidity perspective. And you do see, like, I'm not going to bet against Robinhood. I think they have a hell of a partnership with Citadel. I think the fee structure that they have, where it's free but you basically sign away your rights to be front run, I think all that is unique to them, and they do have great relationships because of that unique structure, and they're going to continue to grow. And the acquisition they made in Canada is a good acquisition in my mind. But Coinbase, whoever holds the most Bitcoin, in my opinion, has the largest advantage in their business model. And I think Coinbase has that in spades. I think Sailor has that. I think if today everybody could look into the future, we would see that there are about 5 major players setting up dominance in the Bitcoin banking space. And they are going to connect the banks to those markets, and it's game over. Now they're the dominant players because people want those connections. So it's like building a really, really great toll road that everybody wants built. Once it's built, people are driving on that sucker, and they're paying to drive on it because they're excited about the time that it's shaved, and the opportunity it presents.
Here in Texas, big thing, right? Toll roads. Were you going to say something there, Andrew?
Well, what I was going to say is we have to give Coinbase credit for what they've built, right? Even though they were so early, they have the benefit of being early and grabbing market share very early. You can't just, quickly move past that point. There were other exchanges that existed back then, right? And they were winning the movement of customers even very early against others like, heck, Mt. Gox and Gemini. Gemini was open back then in 2013, 14. So they all competed against each other, and Coinbase kept winning. And even now, the latest commercial that they put out, right? 21 million Bitcoin would fit in this little box. All the money that was printed last month would take 72 shipping containers, just for 1 month.
Yeah.
In a year, it would take 9 million shipping containers, and whatever they printed in the last 5 years is a lot more, right? So they're not resting on their laurels. They did an awesome job being effectively the custodian of choice for all the Bitcoin ETFs. They created their latest wallet that they created looks like an Instagram feed. So I mean, there are challenges to Coinbase. The core crypto Twitter world are not Coinbase fans because, you know, your money gets stuck. They're going to put limits on things, blah, 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 blah. But, you know, that's less than 3% of their customer base. Yeah. Those other 117 million people are fine with the way that they do things, and their continued innovation, their continued messaging, all of those things keep them in an extraordinary position of strength. Now, again, all that being said, we're living in a moment where AI apps are beginning to seriously chew into the use and market share of search engines, right? So how often does Tillman use Google anymore versus ChatGPT? I guarantee you it has completely shifted in the last 18 months.
Listen, my favorite thing to do these days is to pit Grok against ChatGPT and make them talk bad about each other. It's really good. AI wars.
So that's my point, is that, you know, moats that exist, they don't exist forever. So where are we going to be in 2 years? Where will Coinbase be in 2 years? Based on their decision-making, innovation, all that thing, they'll either have 200 million users or they'll still have 110 million users. Or will Robinhood be? They have 25, or do they get bought by somebody and now they're something else and they've moved off the history books? Who knows? We don't know. But one thing I do know is that innovation doesn't stop. Time doesn't stop, and you better stay on top of those two things, or at some point people move on and don't think about your brand anymore.
Yeah, well, I think they've reached a place from a critical mass perspective, saying that they can't mess it up, but it would be pretty tough to mess it up in my estimation if they just follow the traditional path of the banks, which is the regulated path of, okay, I've got this much in deposits, I can leverage against that deposit amount in the overnight, and they can create enough passive income to maintain their position for a long time, unless they do something stupid where they risk it all in some high yield scheme, something that's not sustainable. If they just do what banks do, which is like, okay, we're going to play it safe. We've got this much in deposits. We earn this much in cash transactional values every month. We're going to borrow against that potential in the form of share price or issuing shares and selling those shares. And they grow for, decades from now with very little effort, in my estimation. I think the bigger thing is going to be how do these highly leveraged institutions like, some of the new ETFs and some of the how do they make it? What is that going to look like? Because Coinbase is, to me, the fact that they have not been shaken. I can't point to one time that I've been disappointed in the way they've handled a drawdown in price. Other than, their fees are ridiculous. But other than that, it's not like we've ever heard of them being hacked. It's not like we've ever heard of them mismanaging, money. It's not like we've ever heard of them being leveraged too much in some sort of earn program or some sort of yield driven program. They've stayed the course as it relates to, we are going to do things the traditional finance way. And I think that's what's now made them, kind of the sterling representation of what that looks like. And I think government is going to, I think they're too big to fail, is I guess the easy way to say it. I think they're critical infrastructure to the United States at this point.
So I got one more question here. I know we're just about done here, but Reg Domain brings up a good point here, I think, because, when we're talking about technology, right, we always talk about the idea that technology is going to continue to widen the gap between the haves and the have-nots, right? So Reg Domain says the poors are still Google searching. Imagine Google trying to charge for AI search. It took new players to change our minds on pay for search. Very interesting. So that when I read that, my immediate thought was, okay, so, again, that brings up a great point, right? Do the poor, are they willing to get out there and spend $20, $25 a month $300 a year on search? Or are they going to continue to use the free search? And by continuing to use the free search, is there, does that widen the gap between the haves and the have-nots? And so then we extrapolate that to technology, Bitcoin in finance. At this point, does Bitcoin, I know we like to talk about everybody can buy Bitcoin, everybody can be a part of it, but does it kind of widen that gap? Why
it's the concept. It's the concept of, there's the term trickle down economics. That's not a meaningful term. The reason why it's not meaningful is because it's just reality. That term shouldn't exist because it's just how the world works. Trickle down happens in every way, shape, and form associated with life, certainly economics. So what will happen is there'll be paid versions of AI, which eventually will turn into free versions of AI. And then 5 years from now, basically 5 years from now, my parents will still be using Google search, and they'll be using in the traditional way, not knowing that effectively the results that they're reading first are Google's AI version of the results.
Yeah, but I think that's a natural byproduct of free markets and the use case value that are behind the use cases, right? Because, like, for example, I know very wealthy people that will go into a Mac store and they will buy the best Mac that's in the store, and they use it for emails and watching YouTube. And they're not using the potential of the machine at all. Like, they don't need that high of a level. And I would argue that the vast majority of us aren't working on anything where it's going to be worth chasing the curve at a cost. It's like AI is going to get so much better so quickly that it's going to be the standard version that's free is going to solve 99% of 99% of the people's problems. You know what I mean? Like, you're going to have to pay to be creating the new pharmaceutical drug, and they'll pay gobs of money for that computing power. But the rest of us, like, we're just watching YouTube and reading emails,
watching cats play the piano and stuff, right?
Yeah, exactly. I don't think we're gonna have any problem with our version of AI. We're still gonna go, look, it fed my dog today and vacuumed the carpet. And
human beings are so simple.
Yeah, I mean, when I have a robot that can pretend very closely to be me on the phone with people that I don't want to talk to, that is the holy grail. I will pay for that version. That's
darn right. Yep. Yep, I will too. Exactly.
Well, we're again associated with the AI stuff. Google became a verb, right? Google it, right? We're 3 to 5 years away from one of the AIs becoming a verb. Chat. Look, what does Chat say about that, right?
Yeah.
Can you look that up on Chat, right? Chat GPT, right? Can you look it up on that? So we're not that far off from that being a reality, and that's the reason why those firms, the Groks of the world, that just got, by the way, that version of the company got merged with Twitter, and now what he paid for Twitter, he's made back, blah blah blah. And then ChatGPT and their parent company being able to raise $47 billion, and it's worth now almost $1 trillion before it's even gone public. That's why all of that is happening, because of the scale of where we're at. Right?
Well, in the data input is changing radically. Like, keyboards and mice will be obsolete in 10 years. You don't need to use your finger to scroll to get information in some list based upon you digesting data. AI agents will be deducing what the data that you need to see is and feeding it to you in auditory, writing the email for you and giving you snapshot to review. And I don't think you're going to be typing 10 years from now. I don't think we'll know what a computer mouse is. Those are outdated data entry mechanisms that are now going to be AI agent run. Like, you're going to be able to say, when you want to check your balance on your bank account, your AI agent is going to be able to tell you what it is and tell you the last 10 transactions that took place, and you can ask it, well, do you see any potential fraud that you can analyze for me? And you're never going to go to the bank website and log in and look through the data in this archaic manner. Hey, I know this is cutting edge front of the seat stuff, Andrew. Listen, listen. Speaking of which, I would like to issue paid subscription, but only for Andrew. He doesn't get to listen to the podcast and hear all these gems unless he pays for it.
Won't that affect his cookie fund?
Yes, it will. Yes, it will. Yeah.
Oh man, hey, listen, guys, I appreciate y'all joining in today. As always, great insights, great thoughts. Everybody, make sure that you're following them. You can follow Tillman at TexasOL61. Follow him. He's got a very small following. He needs people.
Listen, don't follow me if you expect me to send you a bunch of junk posts that pander to you. That ain't happening.
Yeah. Is that Andrew's job? Is that what you're trying to say?
That's exactly what I'm
You can follow Andrew at AP_abacus. You can follow me at TXWest Capital. Don't forget to follow the Forked Feed as well. Lots of snark, lots of great commentary, but real thoughtful stuff, guys. It's fun because it's snarky and, it gets to be a little brash. But at the end of the day, the information coming out there is legit. Commenting a lot on finance.
Well, in the words of the great Ricky Bobby, if you don't follow this show, then fork you,
Ricky Bobby was a legend. Yeah, for saying something like that. Right? All right, guys. Hey, listen, we'll be back again next week. Let me see here. When is the Bitcoin conference? It's the 27th,
2
right?
weeks,
Oh, you guys are going to be there.
2 weeks. Yeah, 2 weeks.
So in 2 weeks, are you guys going to be head up having to do that? Are you going to be able to make the show or what?
Oh, we'll still make the show, man. We'll still make the show happen, baby.
I figured I'd ask now, to make sure that the people know. So
I'll have an AI agent here in my place to do my job. And I am now going to build the first AI pandering agent. So and I'm going to put that thing on my Twitter. It's every comment is just going to pander it, right? Like, you are so smart. How did you come up with this?
Yeah. Yeah.
Well, that's what people want to hear anyway, man. You're going to see, you're going to surpass Andrew in your follower count. With that, right?
Listen, I don't know if that would ever happen, because if it even started to come close, he'd start buying followers. Yeah.
I wouldn't be caught dead doing that.
I don't compete with Andrew. He's got a pulse on the market on the Twitter stuff. I've never seen somebody honestly build a following as organically and as fast as he's able to do it. He's people want to hear the inside scoop, I guess. It's always nice to have an ear to the ground.
Or people just give me stuff. I've got a lawyer in the whole Genesis DCG thing that sent me something that's coming out in 2 weeks associated with that ongoing litigation that still exists. And not sure why he sent it to me, but it's 4 paragraphs long.
I have one word to explain it. For all you Seinfeld folks, Kavorka. That's what's going on here.
Strategery.
Strategic Kavorka.
Strategery.
All right. Well, hey, listen, we appreciate you guys joining in as always. I'll be back on Friday with my show, guys. A bunch of trading insight, lessons to learn there, breaking down the market and whatnot. But we will be back next Wednesday, 11 a.m. Central, 12 p.m. Eastern, right here. So we'll see y'all then. Take care. Have a great week, y'all. Thanks a lot, guys.
You guys. Bye.